Traders, welcome back to another YouTube video. And we had a strong bullish uptrend, and we're going to talk about how to find a high probability setup during a strong uptrend like this. But the volatility slowed down a lot. It's no longer as extremely fast as it used to be. It felt really slow throughout some areas, but that's just because we've been used to having a really fast market the last couple of weeks. But market is now back to normal. You have plenty of time to think about setup, so you're no longer forcing an entry. So it's been quite calm today, which is good to know because these Forex markets are really tricky sometimes. But let's talk about how to find high probability setups, because today we started with the range like looking structure. There's no clear bias, no clear uptrend or no clear downtrend. There's a move up, move down, move up, and move down. There's a triple top, and you always have to mark your key levels, and there's a double bottom. You always have to mark your key levels. They will come into play. And the most recent structure for the start today is a bearish downtrend. Now you guys can see there is an overshoot of the bearish downtrend. This is unnatural activity in the market, and a lot of times will lead to a break of a trend line or straight up reversal. Okay, break of a trend line occur right here, and after break of a trend line you expect for price to retest new extreme. You don't look just for reversal yet. According to trend line rules, after break, traders will attempt to create a new extreme. That was actually a double trap entry, but it was a little bit too early. But you guys can see price is attempting to create new low, but it found support at the key level for the day, and it followed by a big bullish bar. This is a strong rejection of price right here. And this tells you that you no longer want to be looking for any short entries directly into the support, because if you combine the key level with the big bullish bar and the overshoot, that tells you that you're most likely going from the bottom to the top rather than selling directly into bottom. So the overshoot, the big bullish bar, and the key level told you that you're no longer looking for price to go down. Now market strongly pushed higher, and you guys can see you have a two-legged pullback. I didn't mark this two-legged pullback. This is a high probability setup. Well, it would be, because high probability setup is a second entry long at proper key entry point, and here you have two key entry points. But what is wrong with this setup? First of all, it's a little bit congested. A lot of bars are stacked next to each other. Also, it closed very on its high, and you have very little room to the micro double top right here. Now, I've prepared an example for you guys of the similar structure that happened almost a month ago. And if you guys take a look and you compare these two patterns, they look almost identical. And for that reason, I didn't like going long here, and I didn't like going long here today. And the reason why I'm showing you this is, no, you don't have to completely remember every single pattern, but just to prove you that price action works. These patterns repeat over and over again. And if you learn to read the price action, you will have a skill that is worthwhile, because if you just keep watching this every single day for years and years to come, if you just keep watching the candle spread on the chart, it's just a matter of time before you remember these patterns, before you start being fluent in price action. It will completely come natural, and you will acquire the gut feeling, because sometimes you have a gut feeling about certain trades that you don't want to enter, and you can't really explain it, but there's because you've seen it fail or you've seen it work a lot of times in the past. So with experience, trading gets much easier. So you guys can see the pattern looks similar. You have very little room to the highs. Micro double top right here, and it ended up being a failed breakout, just like today. It barely worked for a scalp, but it didn't work for a scalp here because volatility was slow. Volatility here was still a bit big, so it worked for a scalp, but next time it may fail. So you don't want to reinforce bad habits. You guys can see it turned down being a failed breakout, and it ended up pushing lower, just like it ended up pushing lower right here. All right, so price action patterns work. No, they're not going to be identical every single time, but they don't have to be identical. Only thing you have to use these patterns just to get a good context, read the good bias, and you can create consistent profits if you just keep watching this long enough. After the price consolidated here, you guys can see pure indecision. This is called consolidation, and most breakouts of these consolidations will fail. So you don't want to take any entry at this point, and you have no room to the highs or to the lows. Price pushed lower, and this was a pretty pivotal moment because the key level for the day held, and price strongly reversed higher above the exponential moving average. Take a look how price sliced through the exponential moving average. This tells you that this is a strong bullish momentum, and at this point on, bias is bullish because the support held, and you're coming from the low of the range to the top of the range. Now, once the price is working higher, you have a first break of the uptrend. So you expect, according to trend line rules, new extreme to be formed. You have a new high, first entry long, but you don't want to take first entry. That's not high probability setup yet. It failed, downtrend, had a break and a new extreme, which tells you that sellers are no longer in control, and the second entry long formed. EMA kept holding price. So this is a two-legged pullback, at the key entry point while you're expecting new extreme to be formed. Now, I only marked it because it is a good context trade. Unfortunately, the bar is way too big and you're going long at the very high of the move, so this is not enterable, unfortunately. But next time you see this bar, it's going to be a little bit better. The context is still the same, so for that reason I'm marking it. But this was a textbook two-legged pullback at the key entry point while the uptrend is still in play. These are the kind of setups that make trading really easy. Now after that price consolidated here, strong, basically similar pattern right to this one. You have 10 to 15 bars working sideways. You don't want to take any entry. There's a little failed breakout and price strongly reverse higher. Very hard to pick this entry. You have no key entry point at this point on. Now once you see this bounce right here and price is pushing higher and pushing higher, this is how you can find a bigger pattern, because once you see more pushes to the upside, there's a bigger pattern in play. There's actually a new extreme form. There's a first attempt to sell, second attempt to sell, failed by nice bullish bar, but you're going long directly into this top. This is very tempting entry, but if you focus on the key level, you might get a little pullback. But had this been a little bit lower, this would have been great, because any second entry to sell in a bullish structure is most likely going to be trapped. So you're looking for second entry longs and failed second entry short. But take a look how price strongly reversed higher and never look back. And now you're too far away to fade the breakout. Yeah, this breakout would have made the scalp, but you already are way too far up from the key level. And this has been such a strong bullish move from this bottom right here. So you no longer want to be fading at such a strong breakout. There's supposed to be a range like structure: move up, move down, move up, move down, move up, and then you can fade it to move down, not just strong bullish move like this. So once the uptrend is working, we just want a simple high probability setup. Two-legged pullback at the key entry point. Once again, another tempting entry, but you're not quite close to the EMA. There's a downtrend in play. The micro double bottom is really indicating that this trade maybe work. A lot of times these patterns will work, but I'm not really keen to mark this entry as a really high probability. You really have to know what you're doing. You really have to notice the double bottom, but this is a strong bullish structure, and all you're looking for is a second entry long. So decent entry right here. Market pushed higher, and when you're watching this live, you keep having a little bit of an overshoot right here, so you move a little bit higher, and once you keep having more and more overshoots, it's probably a little bit wider channel, because overshoot should be mainly just one like this. If you keep overshooting, that tells you that it's most likely a two-tier channel. It's a little bit bigger pattern, so don't really argue with the market. If it's keep pushing, you probably want to expand the upper trend line a little bit. There's a new extreme form. There's a first entry long, second entry long, but it's far from EMA and a doji bar, so you cannot go long here. There's a little pullback lower. You're expecting to get a second entry long, but you never got second entry long. Unfortunately, just first entry worked. So you have to sit here and not take any high probability setup. So it's quite slow today. Such a nice move up, but this comes with the price action. You have a strong correction, and the uptrend got confirmed right here. First two swings set up the trend line, and third swing confirms the trend line, which tells you that the trend line is valid. But you cannot take this long right here because the downtrend is still in full effect. And you have a first entry short, second entry short, two attempts to create a new extreme. EMA holds price and trend line is holding price. This is a failed second entry short, high probability setup, worked just barely enough for a scalp, and it instantly reversed. But nevertheless, this is a decent high probability setup. Even the higher low was a little bit decent, but it's a little bit big. You kind of have to use limit orders, but I really like waiting for the second entry short here. So this was a quick, easy scalp, barely got out, and market created, moved to a new extreme. You guys can see break of a trend line and two legs to a new extreme. And now this is a bullish structure, so you're no longer looking to sell. Don't even think about selling on a structure like this. Don't even think about failed second entry longs. I know that you may think that some longs got trapped going long at the top or in the middle of the range. Forget about shorting. You want to stay with the trend. Trend is your friend. Just let these corrections play out and keep buying, keep adding on positions. You don't have to be selling in such a strong structure like this. That will get you. You will miss these high probability longs just to gamble on few shorts, which is not really a long-term sustainable strategy. Now, so you have two legs down. The support is forming. You have indication this is still a strong bullish uptrend. You have a good push above EMA indicating bullish momentum. This is basically what you are waiting for. You're waiting for this correction play out, and you're waiting for push above EMA to give you bullish momentum. Push above EMA failed, and now is a strong push above EMA. And you have a new high, and you have a first entry long, and you're expecting to get second entry long, but you never get. You just get a first entry long, and you get a break of this uptrend and new extreme form. Also, you have a double top right here, so you no longer be looking to go long. after break, new high, and a double top right here. Now, market keeps consolidating lower, keeps consolidating. Once I said, don't look for any shorts. You're below EMA and the downtrend is still in play. So you don't want to be taking any longs right now. You have first leg to a new low, pull back, second leg to a new low. You guys can see these legs are measured. At the time, as the channel is expanding, there's actually a bigger pattern in play. Like here, you can actually find a little bit off the top. Now, a little bit tempting to go long right here. I really like some decent setup right here because this is really looking like a descending triangle. Not really that's the setup you want to be studying, but it really looks like that the downtrend played out with the 2 legs down and you get additional leg down, quadruple bottom. This key entry point got confirmed, but you want to see a nice small bar. You don't want to see such a gigantic bar like this. But you guys can see that the price action works. In an uptrend, you want to keep buying on the pullbacks. You never want to be buying at the very top of the move. Wait for price to pull back a little bit, give you that second entry at the bottom. And this is counterintuitive, but this is how it works. You want to buy at the low. Now, market strongly push higher, and you're expecting the same thing as you did right here. Strong bullish momentum, new high, and you're expecting to get a second entry long. You have a new high, first entry long, pull back, second entry long. Also, this was the lowest low. First entry short, pull back, second entry short, failure. 2 high probability setups, gorgeous big bullish bar, EMA holds price, great entry. You still expect to get a new extreme for this uptrend. You guys can see this first entry didn't manage to make a new extreme. So this second entry still you expect a new extreme, which was created all the way up to here. Now you want to enter this trade, preferably with the limit order. I entered it with the limit order further back. It quickly filled the scalp and stopped the runner, unfortunately, because look what a runner I missed, unfortunately, but that happens, that comes with the territory. But this is nice 2-legged pullback. Also, downtrend played out with the break and a new extreme. EMA keeps holding price, so this is a decent entry. You have enough room. You need to create a new extreme. If this bar triggered below this bearish bar and instantly reversed, you could have probably entered on engulfing entry. But it's always better to wait for bar to finish, so you know that you see the bullish momentum. After this, price strongly pushed higher. Now, you have a break and a new extreme for this uptrend that has been working higher. You have a break now. Excuse me, you have a new extreme. So this bigger pattern is in play, but you're not sure just yet. After such a strong, steep move, you want to give a price a little bit more room. And this is once again based on price action, because you see a nice new high, first entry long, second entry long, but this is not a good entry. It's too early. You need to let price action correct a little bit after such a steep move up and a new extreme for this medium downtrend. There's a double trap, which I don't like as well, because it didn't really close above EMA, and it is a horrible bar looking like a doji. So you can't take any entry here. It created a new high. You have a first entry long, pullback, second entry long. Now, when I was watching this, I didn't like this entry yet because it was a little bit below EMA, but there's a triple bottom forming here. And if you are smart and you found this trend line of these first 2 swings and this swing confirmed it, then this would be a great entry, because this is now a third swing. If you combine it with the support here, there's a second entry long, higher low. I should just use a second entry long. Here is the second entry long in a strong uptrend, because by this point on, this is really strong uptrend, and you're actually expecting to get a failed second entry short right here. New low, first entry short, second entry short, failure, but it's hidden. There is no trigger below this bearish bar, no trigger here, so there is only a first entry is still in play right here. Okay, so you can't enter this, even though it would have been great because EMA kept holding price. Unfortunately, failed second entry short happened all the way up to here, which you can't go long at the very high of the move, so far away from EMA. Now price pushed higher, so you keep drawing the short-term trend lines, and if you zoom out like this was pretty important moment in price action, because I really expected at this area to correct all the way down to here. But once you bounce from this point on and you keep pushing higher, this confirms and really solidifies how strong of an uptrend this is, and you really want to solely stick with the longs. You don't want to pick tops or anything like that. So you have a new high, first entry long, second entry long, 2-legged pullback. EMA keeps holding price, downtrend played out with the break and a new extreme. You close above EMA, EMA keeps holding price. When I was watching this live, I may have been a little bit skeptical. I really expected a deeper correction, but it just goes to show you that you never argue with the trend. These trends are designed to make look correct these pullbacks weak, but you just have to keep trusting the price action, and you have to keep buying. So you have a high probability setup, 2-legged pullback, 2 key entry points, and even it is a breakout pullback entry as well. And then you get a higher low entry right here, a little bit too big. You're going long at the very high of the move, but the context here is decent. And then price is consolidating, EMA getting completely flat. This is a clear triple top, clear multiple bottoms. You have a new low, higher low here, which would have worked for a scalp. But looking back, I quite liked it at the time, but looking back, you wouldn't have gotten filled. There's a little gap, which means your limit order is not filled. But you're going long into triple top right here. And then you have a new low, first entry short, second entry short failure. But EMA is in the middle of those bars, and bars are stacked like this. So no clear entry at this point on. And then you have a new high. Once again, keep drawing the short-term trend lines. They will keep you on the right side of the market. New high, first entry long, pullback, second entry long. Close to the EMA, nice big bullish bar, strong uptrend. Market kept pushing higher. We actually had a bearish move down. And this is let me zoom out a little bit more. You guys can see this is the first break for this overall bigger pattern. So you know what's most likely going to happen. You're going to get a retest of a new extreme, but you don't want to be buying this correction as it's working lower, even if you have a break at a new extreme, because it can make a second leg down. We've seen that the downtrend made first leg down, second leg down, first leg down, second leg, and a little bit third leg. You never know how many pushes down you're gonna make. You expect to get a new extreme after such a strong bullish structure, but you cannot pick a bottom at this point on. You have to wait for confirmation of bullish momentum. So we have a strong push above EMA, which is a great confirmation of bullish momentum. And take a look, you have a new low, first entry short, second entry short failure. But can you tell me what's wrong with this trade? It's too far from EMA, and you're going long at the very high of the move. It's too far from the exponential moving average. Okay, instead you have a new extreme, and you have a first entry long pullback, second entry long, 2-legged pullback, high probability setup at the EMA. Let me just mark it because this is a beauty. Actually, looking back, your stop loss has to go below this bar, so this would have once again little bit mess up your trade, which always sucks when your stop loss has to go all the way down here, because you cannot put the stop loss below this bar. You can get stopped out on the noise. Market can go here and then reverse, stop you out, but technically you would have been still in, so your stop loss always have to go below this swing right here. You cannot monkey with the stop. But this is a 2-legged pullback at the key entry point, and take a look, strong bullish momentum, and you're expecting to get a new extreme. So the context is completely perfect. Well, we actually got a decent high probability setup at the very end of the move. So this was the structure for the day. Never argue with the trend. Keep drawing the short-term trend lines, and never look for shorts during a structure like this. We'll look for high probability setup. Keep it simple. 2-legged pullbacks at the key entry points. You guys can see there are a couple of these, and it got a little bit confusing right here because it really looks overdone, and I really expect a little bit bigger corrections. And plus, it is a little bit weird uptrend because it is a move, trading range, move, trading range, move, trading range. It's a little bit hard to capitalize on an uptrend like this, but nevertheless, you just have to stick with the price action and follow the rules, and just keep buying when you see a structure like this. If I don't have a break, move to a new extreme, and we can expect correction. Now, this has been such an extremely strong uptrend. This is not going to reverse just like that. And one little caveat: when you see a strong uptrend like this, correction is going to be wide. If you had a little bit, move just from here, you most likely don't want to take it, because big patterns require big corrections. So no surprise, price corrected all the way down here, because you really need to give it room to correct. And yeah, price gave you a high probability setup. So volatility is back to normal. It was very slow, but you can still capitalize on a couple of good setups. So hopefully you guys had a great trading day. I know that catch some of these setups is not easy, but if you manage to catch one or two of those, that's all you need. All right, so I'm going to see you guys in the next one, and take care, buddy. Bye bye.